I'm Catherine Ross, and I'm here live from the NYSE. Jim Cramer's off this morning, so joining me is Jeff Marks, Senior Portfolio Analyst at Action Alerts Plus. Jeff, I want to start by asking about Iran. Now, we've seen the market has been so resilient despite the missile attacks. What could be the catalyst to get the Dow to 29,000?
Well, I mean, in the interim right now, it's a lot of analyst activity. There's just been so many sell-side analysts upgrading stocks, raising price targets on stocks lately. I mean, look, you had a lot of, it's been a lot of tech focus too. You've had a lot of cloud stocks, see some positive research earlier in the week, coupled by some FANGs in the middle. And now we're seeing a lot of financials get some positive views. And what's critical with the financials is they're going to kick off earnings season next week, so expectations are certainly going to be elevated. So you're going to need to have research do it now, and you're going to have earnings season as the follow-through to really get the market to the next level. But look, we had our Action Alerts Plus call yesterday with all of our subscribers. It's an hour-long call. If you're unaware of what it is, I highly recommend checking it out. And we really talked about, we have a little bit more tactically of a neutral view on the market right now. We're not Armageddonists. We're not saying it's, there's a lot of bad that could go wrong in the markets. But look, we recognize that stocks have had an incredible run over the past couple months, weeks, really any date of line of how you put it. The stocks have had a great run. And I think tactically we just want to be aware of there's a lot of things that are elevated. So we've been peeling some stock off at Action Alerts Plus. But yeah, with earnings season coming up, the earnings are definitely going to have some follow through to keep this market going.
Now, of course, you can watch the full call over on ActionAlertsPlus.com. Jeff, Bed Bath & Beyond, speaking of earnings, posted earnings last night that disappointed investors, and CEO Mark Triton has said that it was a disappointing quarter for them, and he was also a C-suite over at Target before coming to Bed Bath & Beyond. I'm wondering, is this too late for Bed Bath & Beyond? Can they turn the story around?
Yeah, so I mean, look, the numbers were the numbers. That earnings miss was quite large, and there was a comps miss too. But I think it's too early to write them off because I think this was like his first quarter really in there. So I mean, look, Rome wasn't built in a day. I think you got to give him a chance. On the conference call, he talked about his I think it was like a 5-pillar strategy of how to really get things going. And look, Bed Bath & Beyond was so poorly managed previously. I bet there's a lot of low-hanging fruit out there that he can just come in and improve right away just to get some of the, some blocking and tackling going and get that better. But I mean, longer term, it's going to take a long time. This is a tough one. There's challenges out there. I do think it's too soon to write it off, but at the same time, I kind of want to give him a shot,
I think that's a fair point, especially since just in December, he cleared house of a lot of the Bed Bath & Beyond C-suite and is starting putting in his own guys. So we can give him another quarter?
Exactly. Look, he has a very high, very strong reputation at Target. So obviously he's going to want to put his people in and get his mission going. I mean, I think they were talking about on the call too. The Bed Bath & Beyond in the bed category is still a really a highly searched company. So there's interest in the product. There's interest in going there. They're just going to have to figure out the strategy to convert that into both sales and operating leverage earnings.
Everyone loves those coupons. Of course, Bed Bath & Beyond is our real money stock of the day, so head on over to realmoney.com for more on that stock. Jeff, yesterday we got better than expected numbers from Macy's. Today we got worse than expected numbers from Kohl's. Let's talk about down and out retail. What are your thoughts at that sector right now?
Yeah, so I think what's important here, and full disclosure, we own Kohl's over at Action Alerts Plus. It's been a disappointment. I'm going to talk more about Kohl's over on the Action Alerts Plus call after this video. But I mean, yes, Macy's better than feared. Kohl's just bad. But both comps numbers were in negative territory. So it's like, we hear a lot of talk about the strong consumer, wage growth, people going out and spending. But where are they spending? Well, they're probably, they're spending a lot of their money online if they're going to do shopping. They're doing online, and we saw the holiday sales numbers when MasterCard Pulse, they put out their readings. Online growth is really where all the growth is. So Kohl's and Macy's really just don't have that strong presence there as compared to other retailers. So maybe that's just why they're not seeing the dollars like everyone else. And what we do know is that when those brave consumers do go off and they want to venture off into brick and mortar, walk into a store, which I prefer to shop online, but I give it to those brave consumers out there who are, willing to do that. They want that treasure hunting experience, right? And that's really what off-price gives you. And that's going to be Burlington, Ross Stores, and TJX. Those are the ones with some really strong comps numbers in the apparel space. So I think there's winners and there's losers, and the winners continue to be off-price, and structurally challenged department stores are still structurally challenged.
I want to ask you about Grubhub, since we got rumors yesterday they're thinking about selling. And Jim and I have talked a lot about Uber Eats and why he thinks that Uber should sell Uber Eats. Is this possibility of Grubhub selling itself kind of proof that this space is really hard to be a part of?
Yeah, exactly. I think that there's just too many players out there, and consolidation will go a long way for everyone involved. I mean, think about it. We have Uber Eats, we have Grubhub, Postmates, and DoorDash, 4 players. If you think about the gig economy, what's the maybe the easiest parallel? How about ride hailing? And you have Uber and you have Lyft, 2 players. So right now there's 4. I think that needs to get down to 2. I don't know if that means Grubhub needs to go to Uber Eats, maybe in a different outfit. I don't know the answer to that. That's really if they do sell, who's willing to pay the best price. But I think consolidation will go a long way because there's just too many consumer choices out there. So I think that would be smart on their end.
Jeff, thank you so much for joining us today. Now, of course, we're heading over to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com, where we're going to be talking about Kohl's and what investors need to know about that stock. I'm Catherine Ross, and we'll see you tomorrow.